Dutt of Quantum Securities has joined in now to take us through the actual opening of the market. Sanjay, morning. Your dogs are finally beginning to bark after a long wait. You must be happy at the way Reliance has finally performed.
Yeah, then I think, of course, I would like to issue a statutory warning. I'm an eternal optimist, and so, hear me with a pinch of salt. All your viewers must realize that. But, I'm pretty clear that we are unnecessarily hyperventilating about what's happening in Japan, etc., etc. This morning, in fact, in front of me, I had the Wall Street Journal. I was reading some of the tables. Japan is down 11% YT, 14% YTD, that's the Nikkei, and we are down more than that, in fact. The other way around. We are down 14%, Japan is down 11% YTD from 1st Jan. On a 52-week rolling basis, we are up about 5%, and Japan is down about, I think, 7% or 6%, something like that. So, let's just put all this in perspective, and this I'm talking about the Sensex. If you go to the broader market and see where we are, I think you'll see a stark, underperformance in Indian equities. The world is not coming to an end in India, in terms of corporate governance, in terms of scams, in terms of everything else that's negative that's happening to us, whether it's oil, etc. But this is a time to actually go and buy select mid-cap and large-cap companies which have real value in them. And, we had people talking about corporate governance, and now we have the best names in insurance in Asia, the largest banks in China investing in those same companies or giving debt to the same companies. So are we at home a little more worried about them while, there's not enough diligence being done by people outside? There are questions we need to answer and actually get down to hard facts and numbers, because that is what matters ultimately, and not what you and I read in the headlines or comment about morning and evening. We shouldn't get too obsessed about what's happening by the hour or by the day.
Sanjay, morning. So you wouldn't be surprised if you see the index piercing 5,700?
I wouldn't be. In fact, my bets are clearly there. And in fact, I won't really be surprised if the RBI action today is, nothing, in the sense RBI just stays pat, and of course, the comment would be that they would be on the watch. I won't be surprised, because 95% of the herd, the street, feels that there's 25 whips around the bend, but I don't think so. So I'm definitely betting that there would be some event once things cool down in Japan, once things settle down in Middle East, which is already in the price to quite an extent, because it's been on for weeks now. There's no reason why we will not break 5650, that's the 200 DMA or whatever that is. And I'm not worried about that in any case. Like I said, I'm focusing on individual stories. The next 24 months are to make money in stocks and may not be in the index as such. So just go down there, do your homework, read those balance sheets, meet the managements, meet the companies, attend conference calls, attend earning calls, and get a perspective of what's actually happening on the ground. So forget the index, whether we'll break 5,700 or we break 6,000, I don't care.
So what are your top 3 stocks in the Nifty now for 12-month outperformance?
I continue to be positive on Reliance as a large cap in a portfolio. Yes, of course, the likes of Reliance may not be 3x, 5x in the next 2-5 years, but as a perfect, stabilizer to the portfolio, my top pick would continue to be Reliance. I think that looks pretty good. Of course, the ADAG pack, I continue to remain long, and I will remain long, because I think this is the year for both the groups to perform. There's tangible work going on the ground, which we're already seeing, what the deals they've delivered in terms of what happened to the life insurance business, etc. Whatever money they had invested in the entire business, they've recovered. And the most interesting part is it's a cash out deal, it's not money in. So which means that 3,000 odd crores that's coming into the company will be further deployed, as we read in the analyst reports in the press, will be further deployed to build a book. So, both infra, Reliance Capital, both look good. Stocks like Jaiprakash Associates, which haven't caught up. And of course, all these are in my portfolio, and I've held them for a while, and I believe in them, and I'm quite confident I'll make money. But I may not make money in the next week, 10 days, 15 days, or a month.
The observation over the past couple of days, Sanjay, has been that perhaps this market has also put a durable bottom in place, where it's not cracking that much on what is clearly bad news.
Yeah, Mitali, that's exactly where I started when I said, look, Japan, which is in the middle of everything, in a complete mess, what Nikkei is, in fact, lower than what we are on a YTD basis. And, on a 52-week basis, rolling basis, we are, just about marginally above Nikkei in terms of outperformance. And look at the growth that we have, irrespective of the problems that we are plagued with, whether it's oil or it's scams or corruption or whatever you may have. So I'm reasonably confident that you have a bottom in place now at the 5200 level, so I don't think that will be breached, or in fact maybe even higher at 5400.
Sanjay, what's the problem with infra? I mean, we've seen buying in banks, in Reliance, in ADAG, but the L&Ts and JPs are not very much from their lows. By when do you think they start getting into the game?
I think as confidence starts returning into the market and we have large amounts of money coming in, we've over the last 1 week seen about, nearly about 1,000 odd crores of FI inflows net, last 4 or 5 trading sessions if I get it correct. Once we see a large amount of money coming in and, people, because what's really plaguing the markets worldwide are obviously is global uncertainty. So if I'm a fund manager sitting on a few $1 billion, I would rather wait. I wouldn't want to deploy anywhere. I may not want to sell in India in particular, but I may not want to deploy aggressively also. But I think that's all going to fall in place in the next few months, or maybe in the next few weeks. I won't be surprised. It's a matter of time, For instance, I can even count so many stocks which had gone down and up 40% in a week, but infra is not what you correctly said. And this re-rating will happen and it won't take any time, and suddenly you'll see them up 25 to 30% and all the underperformance would be caught up in the next 4 to 5 days itself. So one can't take a view on a day-to-day basis or a 3-day or a 4-day basis on these stories. So if you're convinced on infra, you're convinced on capital goals, you're convinced on some oil and gas plays, just look at the right spaces, right stocks and buy them. I think leave the index behind, that's random noise in my opinion.
Just to scratch that point about Reliance though, Sanjay, what do you think is working for that stock now? Is it an ownership issue, or is it that the market is sensing some kind of upside cushion in terms of earnings because of events in Japan, etc.?
I think everything, Vitali. If you look back at the events in the last 4 weeks, and I pointed this out last time when we were, sitting together on the show a few weeks back, the single largest FDI, we all worry about flow, the single largest FDI in the country in the first 60 or 70 working days commitment has come into Reliance Industries, where BP is putting in money into the company, and not even into the company, a small part of its business, and that to $8 billion. Now that's not chicken feed. So definitely there's potential there. We see gas output ramping up in the next few months, and because the short-term nuclear scare, I think what I'm reading worldwide is that natural gas as a source of fuel would again turn into a priority, because there are short-term concerns about nuclear plants, etc. So whether it's gas, whether it's the investments that are coming into the company, the commitment that's coming in from foreign investors, and also the refinery margins, they talk about some refinery margins may look up because of Japan. It's a combination of these which has led to the spurt that we've seen in the last few days, and which obviously is led by buying from institutional and non-institutional sources.